Did you know that with just one investment in the Vanguard S&P 500 ETF, you could own a part of America's 500 top companies? Let's find out how this powerhouse ETF managing over $500 billion in assets is shaping the portfolio of millions of investors. In today's video, we are taking a close look at the Vanguard S&P 500 ETF, also known as VOO. This ETF isn't just any fund, it's a significant player in the financial markets, providing extensive coverage of America's largest companies. Our aim today is to provide a detailed analysis of VOO, covering everything from its core features and performance to its sector allocations and potential risks. Whether you're considering adding VOO to your portfolio or just want to learn more about how it works, this video will give you all the insights you need. So without further ado, let's dive right into the details and uncover why VOO is considered an S&P 500 giant. As many of you already know, ETFs or exchange-traded funds are investment funds traded on stock exchanges. Much like stocks, they offer investors a way to purchase a broad portfolio of assets. For those new to the channel, I've covered ETFs in more detail in previous videos, so feel free to check those out for a deeper understanding. Today, we are focusing on the Vanguard S&P 500 ETF, commonly known by its ticker VOO. This ETF aims to track the performance of the S&P 500 index, which includes 500 of the largest U.S. companies across various industries. Managed by Vanguard, a leader in low-cost investing, VOO stands out as one of the most attractive options for individuals looking to mirror the performance of the S&P 500 with minimal expense.
Like, what you telling me, like, come on, suck my dick, nigga.
Now that we went over what VOO is, we need to go over its fundamentals. The Vanguard S&P 500 ETF boasts an impressively low expense ratio of just 0.03%. This figure is crucial for investors to grasp as it directly impacts their returns. To put it in perspective, for every $1,000 invested in VOO, only 30 cents goes towards annual fund management fees. This low cost is a significant advantage as it minimizes the drag on performance due to fees, ultimately maximizing returns. With expenses kept to a minimum, investors can retain more of their investment gains over the long term. Moving on to dividends, VOO offers a dividend yield of 1.35%, with dividends distributed quarterly. This feature makes VOO an attractive option for income-focused investors, providing a steady stream of income alongside the growth potential of S&P 500 companies. Regarding liquidity, VOO boasts an average 30-day trading volume of around 5.72 million shares. High trading volume indicates high liquidity, meaning investors can buy or sell shares of VOO easily without significantly affecting the price. This liquidity is particularly important for investors who may need to enter or exit positions quickly based on their investment strategy or market conditions. With ample liquidity, investors can execute their trades efficiently and effectively, ensuring seamless transactions even during periods of market volatility. Fundamentals are important, but so is performance. Let's delve into the performance of the Vanguard S&P 500 ETF. Comparing VOO's performance against the S&P 500 over various time frames reveals intriguing insights into its track record. Last year, VOO delivered a return of 22.63%, closely trailing the S&P's 22.66%. Over the past 3 years, VOO achieved an annualized return of 8.02%, slightly below the S&P's 8.06%. Extending the horizon to 5 years, VOO returned 13.15%, again closely tracking the S&P's 13.19%. These figures showcase VOO's ability to mirror the performance of the broader market index over different time frames. Beyond individual yearly returns, it's essential to consider annualized returns to gauge long-term performance. Despite minor differences in yearly returns, VOO has demonstrated consistency in delivering returns aligned with the broader market represented by the S&P 500. This consistency is a key factor for investors seeking stable and predictable performance over time. The S&P 500 serves as an appropriate benchmark for VOO due to its representation of the largest and most liquid companies in the U.S. stock market. By comparing VOO's performance with that of the S&P 500, investors can assess how effectively the ETF tracks the broader market index. Next, let's delve into the intricate makeup of the Vanguard S&P 500 ETF. Understand the pivotal role each component plays in shaping its overall performance. At the core of VOO's portfolio lies its top holdings, representing the titans of the corporate world. Microsoft, a tech juggernaut, commands a significant 7.08% share, showcasing its pervasive influence in the digital landscape. Following closely is Apple, an iconic brand synonymous with innovation, with a 5.63% allocation. The list continues with NVIDIA at 5.05%, renowned for its cutting-edge graphics technology, and Amazon at 3.73%, the e-commerce behemoth that's reshaping consumer habits. Rounding out the top holdings is Meta, formerly known as Facebook, with a 2.42% stake. These companies not only symbolize the essence of the S&P 500, but also wield considerable sway over VOO's performance trajectory, reflecting the index's dynamic evolution. Beyond individual companies, VOO sector allocation provides a panoramic view of its diversified exposure across key segments of the economy. The largest sector in the Vanguard S&P 500 ETF VOO is information technology, comprising 29.60% of its portfolio. This sector dominates the ETF's allocation, reflecting the ongoing digital transformation and innovation across industries. Leading companies like Microsoft, Apple, and Nvidia are at the forefront of this segment, driving technological advancements and significantly influencing global economic trends. Following information technology, financials represent the next significant sector with a 13.10% allocation in VOO. Financial institutions form the backbone of the economy, and VOO's inclusion of major banks, insurers, and financial services firms underscores this sector's essential role in ensuring the ETF's stability and growth potential. Next, the consumer discretionary sector, which makes up 10.30% of VOO, showcases a different facet of the market. From retail giants to entertainment conglomerates, this sector captures the essence of consumer spending patterns. Companies like Amazon exemplify the dynamicism of this segment, catering to ever-evolving consumer preferences and lifestyle choices, thus reflecting the economic significance of individual consumer behaviors. Finally, the healthcare sector, accounting for 12.40% of VOO, embodies innovation and humanity. This segment includes companies dedicated to advancing medical breakthroughs and improving global wellness. VOO's allocation in healthcare firms highlights the sector's resilience and long-term growth prospects, marking its pivotal role in societal development and economic stability. Understanding these sector allocations not only provides insights into VOO's diversification strategy, but also enables investors to anticipate sector-specific performance trends, thereby making informed investment decisions aligned with their financial objectives. Now, let's explore the advantages that the Vanguard S&P 500 ETF VOO offers to investors. VOO provides investors a broad market exposure by tracking the performance of the S&P 500 index. This index includes 500 of the largely publicly traded companies in the United States, spanning various sectors and industries. By investing in VOO, investors gain access to a diverse range of companies representing the overall health and growth potential of the U.S. stock market. This broad market representation allows investors to participate in the performance of America's leading companies without the need to select individual stocks. One of the key advantages of VOO is its ability to provide diversification benefits to investors. Diversification is essential for risk management as it involves spreading investments across different asset classes and sectors to reduce exposure to any single investment or market risk. VOO achieves diversification by holding a portfolio of 500 stocks across various industries, which helps mitigate the impact of volatility or downturns in any single sector. As a result, investors can benefit from a more stable and resilient investment portfolio, potentially reducing overall portfolio risk. Another advantage of VOO is its passive management approach. VOO is an index tracking ETF, meaning it seeks to replicate the performance of its underlying index, the S&P 500, rather than actively selecting and managing individual stocks. Passive management offers several advantages, including lower management fees, reduced portfolio turnover, and increased tax efficiency. By tracking a broad market index like the S&P 500, VOO aims to deliver consistent and reliable returns over the long term, aligning with the investment objectives of many investors.
Beat your dick off with both hands. Let's go.
That's weird, man.
Now, let's delve into the potential risk and considerations associated with investing in the Vanguard S&P 500 ETF VOO. One of the primary risks investors face when investing in VOO is market risk. As an index tracking ETF, VOO is exposed to potential market downturns and fluctuations in the broader stock market. In times of economic uncertainty or market volatility, VOO's value may decline, resulting in potential losses for investors. It's essential for investors to be aware of this risk and to consider the risk tolerance and investment horizon when investing in VOO. Another important consideration is tracking error. Tracking error refers to the divergence in performance between an ETF and its underlying index, in this case the S&P 500. While VOO aims to replicate the performance of the S&P 500 as closely as possible, factors such as management fees, trading costs, and portfolio rebalancing can lead to deviations in performance. A higher tracking error may result in VOO underperforming its benchmark index, impacting investor returns. Therefore, investors should carefully monitor VOO's tracking error and assess its implications for their investment strategy. It's also valuable to conduct a comparative analysis of VOO with other similar ETFs such as IVV or the iShares Core S&P 500 ETF and SPY or the SPDR S&P 500 ETF Trust. These ETFs all aim to track the performance of the S&P 500 but may have differences in expense ratios, tracking error, and other factors that can affect investor returns. Comparing the performance of VOO, IVV, and SPY over various time frames provides insights into the relative performance. For example, over the past year, VOO achieved a return of 22.8%, slightly outperforming SPY at 22.7%, with IVV falling in between. Similarly, over 3 and 5 year periods, VOO's performance closely aligns with its counterparts with minor differences in returns observed. Investors should consider these comparative metrics along with other factors such as expense ratios and liquidity when evaluating their investment options. With all that aside, who should invest in VOO? VOO is ideally suited for investors seeking broad exposure to the US stock market's largest and most established companies. Ideal investors for VOO are those who prioritize long-term growth and stability in their investment portfolios. Additionally, investors who prefer a passive investment approach and seek to minimize costs while gaining exposure to a diversified portfolio of stocks may find VOO particularly appealing. Given its characteristics, VOO serves various use cases effectively. VOO is an excellent option for individuals planning for retirement. It offers a diversified portfolio composed of 500 large-cap US stocks, thereby providing broad exposure to the growth potential of the US economy over the long term. By incorporating VOO into retirement accounts such as 401ks or IRAs, investors can harness the power of compounding returns. This strategy not only facilitates wealth accumulation but also lays a robust foundation for a secure retirement nest egg. Investors looking to build long-term wealth can also consider VOO as a core component of their investment strategy. With its low expense ratio and broad market exposure, VOO offers a cost-effective way to participate in the growth of the US stock market. By staying invested in VOO for the long term, investors can potentially benefit from the compounding effect of market returns and achieve their wealth building goals. For investors who prefer a hands-off approach to investing, VOO's passive management style makes it an attractive choice. By tracking the performance of the S&P 500 index, VOO eliminates the need for active stock selection and market timing, allowing investors to benefit from the overall growth of the US stock market with minimal effort.
Why are you crying?
In conclusion, we've embarked on a comprehensive journey into the world of the Vanguard S&P 500 ETF VOO. Here's a quick recap of what we've learned. VOO offers broad exposure to the 500 largest US companies with a remarkably low expense ratio, attractive dividend yield, and robust liquidity. Over various time frames, VOO has closely mirrored the performance of the S&P 500 index, demonstrating consistency and reliability in delivering returns aligned with the broader market. With top holdings dominated by tech giants and diversified sector allocations, VOO provides investors with exposure to key segments of the economy. VOO's broad market exposure, diversification benefits, and passive management approach make it an appealing option for long-term investors seeking stability and growth. While VOO offers numerous advantages, investors should be mindful of market risk, track and error, and conductive comparative analysis of similar ETFs. VOO is well suited for investors looking to build long-term wealth, save for retirement, or adopt a passive investment approach. As you contemplate your investment strategy, consider where VOO fits into your portfolio. Whether you're aiming for retirement savings, long-term wealth building, or seeking a passive investment vehicle, VOO offers compelling benefits worth considering. I'd love to hear your thoughts and questions about VOO or any other topics you'd like me to cover. Feel free to like, comment, and subscribe to the channel for more insightful content and suggest new topics for future discussions if you have any. Anyway, guys, I'll see you guys in the next video. Next week, I will have a portfolio update and maybe something else, but I'll see you guys in the next video.